Good morning. Today is November 17th and it's around 9:50 a.m. So, a lot has happened in the past couple of weeks. So, looking at this chart, I think let's see, last week was the 10th. So, we were just about to test whether we would break through this level and head on up or try again and fail. We had just broken through this level and we were trying to see if we can break through this level. And recently, with the CPI numbers, consumer inflation, the month over month results for this current month showed no change. So to me, that isn't like really good news. I would like to see a decrease, but we all know that when prices go up, many times they never come back down. But with no change, that got a lot of people excited because that meant that maybe the Fed was doing their job when it comes to the rates, and possibly in the future, the rates could be decreased. And once the rates decrease, that would set things up for another market run. So the challenge here is that when we look at we're looking at an all-time high of over here. So maybe we have the potential to get back there. Over the last 2 years, yeah, the high is here. So there's some room to go. The problem really is that what has changed? Nothing really. So what is a true catalyst at this point in time? I understand maybe 6 months, 9 months from now, but what is the catalyst to go higher? And there doesn't really seem to be much of a catalyst, in my opinion. But we don't invest in opinions. Whatever the market does, that's what I take into consideration. All right. So, what does that mean for my portfolio? So, right now, I'm still only 28.9% allocated to equity, with 71% in cash, specifically this money market fund that I believe is about 5%. Let's see here. Yeah, I'll do that later. I think it's still around 5%. I considered maybe buying some CDs because or treasuries, because if the interest rate is going to drop, then we might want to get some longer dated, like a year maybe, at the 5.6 or 5.5% that it is there now. Um, I don't really foresee buying any more TQQ because I am already at 87%. So the goal really would be to see how I can get to 100, a little bit more. So I don't feel like there's truly a need for me to do that at this point. So let's take a look at performance. So over the past 3 months, as you can see, when the market was struggling, the account didn't go down as much, and then it made a little curve and started to go back up a little higher. At this point, because the Nasdaq 100 just is so fast, with the it used to be a Magnificent Seven. I don't know what they call them anymore, but some of the best stocks are just in that, and it moves so quickly that it has bypassed my account, which is expected since I am still only at 87%. But with this type of TQQ, because it's a triple times mover, every 1% that the QQQ goes up, this will be going up basically 3%. So I expect that at some point in time that this will automatically go above 100%, which would mean that it should basically stay at the same pace as this Nasdaq 100 line. The S&P 500 right now is out of the picture. We've been doing better than that for the last 3 months. So that is about it. So what I'm really trying to say here is that even though we've had a big run this last week, I don't really have the confidence that anything more is going to happen in the near term future, i.e., the next 3 months. But I am in. If something does happen, I am in a position to take full advantage of it. Okay, so that is it for the week. Have a great weekend and happy Thanksgiving.